Hello, hello, hello. Happy Monday, everyone. How is everyone doing? Boy, already eventful morning, not just with the markets. Got up, my Twitter account's completely suspended. Can somebody take a look at that and see if it's still, I've appealed it. You know, this is such a fucking joke with fucking Elon. Account's completely, I've had since 2008, completely suspended. So, just done. I'm just getting done with everything, but not with the markets. Markets are this is good. This is a little fun. Good morning, John. Sorry you got a lot of rain in Florida. I saw some picture before my Twitter account was suspended last night. I was looking at some of the feeds from Florida. Hope everything's okay with you though. Hope everybody gets back to normal as fast as possible. Good morning, Ro. Hey, Charles. Hey, Patrick. Good morning. Good morning. Yeah, it's a minor spike. So for all the people selling vol, buying it all, it works great till it doesn't. Then you get the margin call. A lot of this is going to be driven by margin calls today. And then watch, especially if there's some Fed announcement or something else, watch for a V spike reversal. It might happen today, tomorrow, sometime, but don't get overexcited unless we recover above the 62.5%. We'll go over everything. Good morning, Jacob. Good morning, Sterling. Is there news? Everybody already knows what, Sterling. Yeah, last time was October 8 and COVID levels. Good morning, Royal Palms. I sold my 517 Thursday put Friday close for a loss. Sometimes it happens. Good morning, Mark. Happy flipping harmonics Monday. Good morning, Anissa. All right. Okay. Again, if you do follow me on Twitter, I'm suspended. So oh well. It was fun what lasted. So what else we got? This is just everything's a joke. Good morning, Stafford. So, all right. Well, by the way, circuit breakers. Circuit breakers for today. By the way, if the S&P futures, well, the markets, if the index is really the S&P index, if it falls 7%, you get a 15-minute trading halt. If it falls 13%, a second trading halt for 15 minutes. And then if it falls 20%, trading is shut down for the rest of the day. Just letting you know. So, I mean, we normally don't even have to discuss stuff like that, and we're nowhere. I mean, we're sort of close to the first circuit breakers, and you'll get dip buyers coming in, but really watch because you're going to get stops triggered today. You're going to get stops and liquidation of other assets. So you could have waves of selling, even if you get a bounce off the open, because as margin calls go through and you get waves of selling, and we still might see ramifications from Friday. Okay. All right, let's see. We still got to check the news. 15 minutes after the cash open, we have the composite and services from the S&P numbers coming out. ISM services. Pay attention to employment and prices still coming out 30 minutes after the cash open. We got some 3 and 6 months bill auctions and then daily speaking after the close. Overall, it's not a major week for stuff. It's a very quiet week in August. Really, it's this. Things are already bouncing back a bit, but look, like Nvidia down close to 12%, Apple down close to 9%. You know, everybody probably saw this weekend that Warren Buffett unwound a ton of his Apple position. So, but everything's fine until it's not because, of course, we have efficient markets. So stuff is down with bouncing back a bit, but this would be where you sit on hands. I mean, if stops are executed by you, this is why you have stops and you follow your rules. But you know what? Unless there's some major downside momentum bars, upside momentum bars, I wouldn't try to catch a falling knife. And still, I'd manage it with an appropriate stop given the volatility. Utilities up up 0.02% today. Everything else is down. Fed watch. I mean, this has now multiple cuts priced in. We'll have to see how this looks. I mean, right now it's 83% on a 50 basis point cut. The market's just in full cut it all the way down again. Which, if they did an emergency cut, see, this is what the joke is, though. You know, people to the upside treat it like there's no risk, and everything's fine if the market just is chugging along up 51% since last October lows. But you know, then we pull back, and it's like, oh, save us, save us, save us. Nobody wants any risk anymore. Nobody wants any risk in anything. Now, this is what happens when the instability, ubiquity. I talked about it. We're almost getting to extreme fear. We'll probably get there on the open. But this is the thing, when the sand pile becomes unstable, especially with all the short-term options that have been, did you see last week, record short-term options? Record. I mean, it's absurd what's going on. So, by the way, with our earnings, not much this morning, afternoon Palantir, but today's sort of a quiet day. It's all going to be based off what the market's crashing anyways. Anybody pick up on the quote from the YouTube title? Anybody pick up on the quote? Hey, Rich Black Monday. Somebody should have got that quote. Famous quote. But really this week, you got a lot of companies still reporting nothing that's going to be market moving. Interesting. Walt Disney will be interesting to see if they're still going to take it in the shorts. Lilly, since that's been one of the leaders, that's going to be interesting on Thursday. Lots of reporting, but last week was the big week in terms of market moving stuff. So let's get to the markets. We're getting a little bounce here. Let's take a look at this shorter term chart. These are the kind of things you're going to see spikes and rollover plays. The first thing I'm going to be watching is really the 15-minute rotation zone into the open. But even on a continued bounce to 5,200 is still pretty key resistance. We have not carved out a significant bottom pattern yet. And more than likely, if something happens, you're more likely to not make it double. You're more likely to get a series of momentum bars. The upside, that may not happen today. Looking at other stuff, the now based off the pre-market lows, remember the tipping point to the upside, as I talked about on Friday with secondary reactions, is back at 55.25, roughly around 55.25. We don't have to go through the exact number is that right? Or did I moved it. Sorry. It's about 54.95. So remember 5,500. That is if we don't make a new low this morning. That would be the full thing for recovery to where I'd seriously start watching for a retest of the most recent highs. However, remember, we've had the declining rotation zone. We broke the 50. We closed below the wedge. And that was one of the things I've been talking about forever if we triggered that wedge. And we triggered it on the weekly basis last week. Pausing at the weekly rotation zone and then collapsing. The next magnet price for me is about this 50-60 area, coming in at the 50-week exponential. And that would complete the 87.5 rules from the low after the April sell-off to the most recent run-up. Remember, the markets are still up for the year. Okay? Yes, this is some technical damage. This week isn't over yet, and you'll probably at some point see buy the dips. Remember, I also said be prepared for a couple more, I said this last week, be prepared for potentially a couple more weeks of downside price action. That could be done short because instead of doing an orderly sell-off, we're in an exaggerated sell-off. So I will be watching for bounce patterns setting up at some point, but that's where we sit right now. I do not try to catch a falling knife. After a 15-minute rotation zone, personally, I'd watch the 1 hour rotation zone. And at this point, the key level for me would be about 50,250. NASDAQ does have a little potential. This could get wiped out on the open. Does have a little potential mini double bottom. Again, remember, I would personally use conservative targets, and that would be for a bounce only. And even if it did trigger, I'd really pay attention to that first key level, about 18,300. Cocoa will get worse before it gets better. Good morning, Heinrich. So that's why I actually agree with Coco. The probabilities are it can get worse before it gets better. So that's why don't catch a falling knife. And you'll get liquidations this morning. And you've already had, there's a lot of Bitcoin and Ethereum selling into very low volatility or very low volume markets this weekend. The Dow almost to the bottom of that double top. By the way, if you did go off the conservative targets, did that target not work? If you did go off the conservative targets, we'd already be there. I'm just watching it closer because I believe over the next couple of days we could still get down to retest the Dow at the 200 simple, which is a pretty strong support area. And remember, a lot of these have shifted. The Dow, we don't know where it's going to close yet on the weekly, but it could be in neutral mode, and it's definitely been in bearish mode. It's definitely in bearish mode on the daily. The Russell finished that. I put the targets up, remember, for that sloppy double just to see where they landed. But I said I would not be surprised to see it reconnect with the 200, which we've done. The next, we're coming into very key support area, which is between 1915 and 1966. Right now, we reconnected with the 200. But any bounce plays, I'll again watching for the short-term rollover. The VIX already pulling back. Going to be paying attention today where it closes at relation to 57. Okay, but this is, if you're zooming out, yeah, here's your COVID. This is above, remember, the December sell-off in 18, and there you go. So we're up at nosebleed, and all the people sell VIX, buy it all, they're in a world of hurt. But in the short term, watch, besides that 57, watch the 50 psychological level. The DAX, below the 200, I said it was looking toppy last week, and then we just died down. But your key level, if I could get the things to line up. Key level, next key target, 16,842. And in order, the breakdown level for continued selling pressures all the way back at 16,300 roughly. The bounce, any bounce in the DAX is about 17.6 as major resistance. You have the notes futures climbing, looking to retest the high area from April and May from last year, where this was a short-term minor top. So I am watching the magnet area for me, and if we do the harmonics coming down from there, the next major is 115.18 and 115.19, which you see all the tops around in there. That would be the first key target area. Yields dropping, coming into the major support area from April and May of 23. So the next major key area to that on a continued drop over the next little bit would be about 3.46, so it's roughly 3.5 area. The 10-2s were definitely above zero today, pulling back a little heading into the open, but definitely above zero. And we should, as this continues to play out from the double bottom, that we should continue to see, and remember, The unwinding of the yield curve when it gets back above zero, especially once it gets above 20 basis points, can put a lot of pressure on the markets. So longer term, even on bounce plays, we could see multiple rollovers still over the next few months. Unless the Fed does something incredible, like completely goes back to, stops all QT and does like a 50 basis point rate cut. But if they did that and juiced everything up, then it could be off the races again. Dollar index was triggered. The double is now through the first target. Going to be watching today 102.47 on close below that. Not only would it be to the full double target still potentially, the 87.5 rule, they're virtually the same levels, which is 101. So that's my magnet price for the Dow. Crude, again, any bounces in this is now rollover plays. We hit the next harmonic area. If we do continue down even lower in crude, and this is based off of recessionary trades, although we got rumblings in the Middle East, so 70 area is my very key support in crude. Gold, you're even getting liquidation in there in the short term. You're getting liquidation pretty much everywhere. Keep an eye on silver. Silver just hit the first target from the double that was triggered back at the end of July. We just hit the first target. My key area for this is still 26. Copper continuing to unravel. Still, I'm expecting over the next few weeks for it to return to 372 area. We have look at the yields on the 10-year. We had a double top, which confirmed, and now, I mean, this, again, no way to easily trade this. It was confirmed on Friday, but not triggered, and now you've already gone through the first and second, but look at the yields dropping. The yen strengthening after the rate hike above zero. But this is going to, with the carry trade with the global equities, this is also putting pressure on it. But the NASDAQ and ES would be setting up huge weekly potential head and shoulders there if there's a bounce and another heavy rollover. And they could be. Don't worry about getting ahead of yourself. Let's go take a look at that. Let's go to the weekly, which they could very well, and would not be shocked to see that happen. Especially, I'd like to see us get down to the 50, get a bounce. That's why I'll be watching. Again, the secondary reaction is going to tell us so much. Okay? But you get a bounce here and you start making a shoulder, start making another shoulder, and then another rollover play. We could be getting back eventually to the 200 on the week. You know, which would put it underwater for this year. But we'll see. Don't know if that's going to happen. Could we do the cocoa bounce and go to, that 24? Yeah, anything's possible, especially if the Fed steps in. If the Fed steps in already, then I'll take everything off the table and say, yeah, we could easily. If they start with liquidity right now, based off this, I mean, based off of, we're down from the highs. What are we down? From the highs to the lows, we're down just over 10%. And when's the last time we had a 10% correction? Which this with the volatility's been so friggin' compressed. I mean, the last time we had it was through the last October lows. So, but that's the S&P, and here's the NASDAQ. Could you easily get the bounce and then making a very large potential head and shoulders? That could potentially return it back to the 200. Yeah. Are we there yet? No. But the market's got to do some serious heavy lifting to get back into full-blown bull mode at this point. Beyond bounces. Euro. Next key area is 110, back to 110.07, 110.7. Spiders, we'll get, by the way, Bitcoin and Ethereum in a bit. Spiders, the key level to watch for on a closing basis is 520.60. You close today below 520.60, the magnet price area would be about 502 to 503, which would return it potentially to the 200 simple. And please don't try to be a hero and buy, oh, I bought the low tick. No, no, no. Wait for this to all shake out. The NASDAQ, the 200 simple is at 429. We're trading 427. The magnet price is about 424 to 425, the magnet price area, so keep that in mind too. Bitcoin, you had you had a lot of selling this weekend, especially in Ethereum. I'll show you Ethereum, but this is transferring through, and people are going to also liquidate things that have run up to pay for other losses. And also, you have everybody really trapped in the good old Bitcoin since February. Remember, everybody bought all those ETFs and everything else, so we could get some Bitcoin continued liquidation. Ethereum, we triggered the massive weekly double top on Friday. See that? And we've hit the first target. I just wanted to show you with Ethereum on the longer term plays, which I've not been covering in here. We got above the 62.5, went to that 87.5, stalling out there, came back down, retested the lows, bounced into the rollover zone again, 50 to 62.5, so that did not invalidate the double, and then rolled over. Back to the 200 on the weekly, back to the first target. Now, okay. So, very interesting, was trading very, very technically there. What else do we have? We have NVIDIA. NVIDIA at this point has finished the double based off where it's going to open. So the double took a bit of time to play out. Remember, that double triggered back on Wednesday, July 17th. But it is going to be complete based off where we open. If we close below 100, I'm going to be watching for continued rollover plays with NVIDIA and a possible reconnection with the 200 simple. But this is going to trap everybody since the split and the last earnings is underwater now. Wonderful Elon and Tesla completing the double also. Key level on Tesla, it's now to watch for continued downward pressure is, what is that? 188.38 on a closing basis. And really look to sell option premium in the short term. That's one of the things I like when volatility has spiked this much. Yes, because for short-term plays, I do like to sell some option premium, but you have to be very cognizant and your timing has to be very good. And this is not an investment recommendation. Why? Because even if the market just flattens out and goes sideways for a bit or slows down the decline, you can have volatility coming in. All right, so I'm not giving this I think for the newer traders, you should not be doing this. But this is a great learning event because even if the markets still drop but decrease their rate of drop, you can have volatility coming in. So if you're a Vega seller, you'll collect the premium from that Vega sales even if the markets still drop to the downside. So, yes, that's what I look to do. But again, be picky and judicious. Okay? Because eventually, yes, the VIX is going to do this again. All right? This is where also I don't like to try to do this with 0-day options. I'm better to play something out a little longer that gives it more time to shake out when it's at these elevated levels. Also remember, this can get worse before it gets better, because people are going to wake up in about a minute. We're going to see stops getting hit. We're going to see some forced liquidations on things. Okay, because all right, just take Nvidia for example. Everybody the split underwater. Earnings that launched the next takeoff last underwater. Remember, we talked about doing the gap fill. I talked about this last week. We're now back there. So a lot of people going to be underwater. A lot of people at break even. A lot of people might be raising stops here now also. A lot of people might be selling some stuff. So let's keep that in mind. Don't try to be a hero. The tick. Oh boy, everything's slow. All right, we're frozen. There we go. There's let's check the tick, which should be very, very negative. Yep. Surprised we didn't hit minus 1600. So what am I watching for now with the tick bounce? I'm going to be watching to see how strongly it bounces before the next potential rollover play. All right. The only thing I'll be keeping a closer eye on is if the NASDAQ can start sustaining above 17.8, then take out the double for a more sustained bounce play. Other than that, I'll be still watching for rollover plays. See, and there's your Nvidia opening right at that 75 harmonic. So that's where we stand there, completing the double. And you could get some increased selling pressure. And I'm going to see how many wonderful dip buyers we have coming in shortly, if people are going to try to be heroes to buy the dip. With that, thank you everyone for tuning in. I hope everyone has a wonderful and safe trading day, and I shall talk to everyone later. Bye for now.